Marc Ostwald, strategist at Monument Securities. Hi, Mark. Plan B. What might it be, the Plan B that Posen was talking about?
I suppose it might be a cut in the remuneration rate. I think it highly unlikely. If they were to opt for the option of cutting the remuneration rate, it's basically an act of trying to force the issue with the banks, which really sort of overlooks the obvious point that the banks really are not in a position to lend. A. B, that a lot of borrowers actually don't want to borrow right now. They actually want to reduce their levels of debt, whether they're corporates or whether they're consumers. So I'm not really sure what Plan B would really be. To get the banks to buy more gilts, yes, they're going to do that in any case because they need better quality capital on their balance sheet. So it's not really a question of forcing them to do that. So it really is up in the air what this Plan B is meant to be.
Has Plan A been a success or not? Is it possible to gauge QE's success?
I think it is very difficult to actually say, has it been a success or not? I would say what it has been successful in is keeping gilt yields down and therefore keeping long-term borrowing costs down. In terms of its actual beneficial effect to the economy, I would suggest very little. Actually, all it's done is feed into the liquidity trap that we have at the moment. And we need that liquidity trap in the banking sector simply because banks are still largely, if one's being honest about it, insolvent. Otherwise, in terms of the benefit for the real economy, very little benefit.
If you were a member of the MPC, Mark, I mean, is that it for QE? The CBI says it should be.
I think it should be, yes, without any doubt. And I think actually it would have been a lot more helpful if we'd actually had something which circumvented the banking system, something like a state investment bank, to provide lending to, particularly to SMEs. Not that SMEs are really quite as tightly strapped as people think. They don't want to borrow either. I mean, one has to remember that the situation we're in, the outlook is still very uncertain. You wouldn't want to be investing for the long term right now with such an uncertain outlook.
UK gilts down 0.2% this year, Treasuries down 3%, German bunds up 3%. 2010, Mark, where should we be putting our money?
That sort of performance I would expect to be partially mirrored. I would have thought that next year is not going to be a great year for government bonds. There's going to be, if we do get a modest pickup in the G7 economies and we continue to see strong growth in Asia and Latin America, then the competition for money is going to be that much higher, and therefore bond yield curves will have to get a lot steeper. And for those countries with enormous budget deficits, which in the short to medium term, i.e. the next 2 to 3 years, have little prospect of being reduced, the curves need to be a lot higher to reflect the risk of a lack of a credible plan to reduce the fiscal deficits, and B, simply there are better places to lend.
Mark, thanks for joining us today. Mark there from Monument Securities.